Welcome to another episode of Test, Optimize, and Scale. It's a privilege to have Shari Noonan here today, CEO and co-founder of Rialto Markets, one of the top names in the equity crowdfunding, in the investor acquisition space. Shari, thanks for joining us.
Thank you, Jason, so much for having me. I'm really excited to be here today.
Likewise. I know we've been at many of the same conferences, part of the same circles in this growing vertical, in this growing space. So I've been looking forward to this discussion and thought we could kick things off with your story, with your background, everything about you and how Rialto Markets was formed.
Absolutely. Well, thank you so much. So my background is traditional capital markets. I actually started in electronic trading. So a few decades ago, back in the 90s, my co-founder Joel Steinmetz and I started in electronic trading and built out a lot of the infrastructure for equities, the public equities market. And then in the early 2000s, most of the large banks bought companies to then integrate into their platform because they said, well, this whole electronic trading thing is actually happening. It's kind of funny to look back now, but in the early 90s, it wasn't a foregone conclusion. There was sort of this, David versus Goliath mentality of, we're going up against the New York Stock Exchange or going up against NASDAQ, when in reality, that's not at all how it evolved. It was just an evolution of the market and market structure. So Joel and I were at a place called Instinet at that time. I left to go to Goldman and he left to go to Citi, and respectively took fairly similar jobs integrating the electronic trading platforms that they had purchased into their larger franchises. And we did that for a number of years. I then went on and was actually a sales trader at Goldman for a few years, the fun years, 2005 through 2008. Those were interesting times. And then I went to Deutsche Bank. I was the COO for global electronic trading, built out and helped. They were really going into more of an institutional direction. And I helped with the build out of that in support of that. Was the COO for global equity derivatives. That was really a job that was 2012-ish to 2014. That was really a job around after the financial crisis. All of the models, equity derivatives. There are a lot of models that are run, a lot of different systems. So that was really my role there. And then I was the COO for global equity trading. And that was really another role of market structure. A lot of market structure changes were going on. So in 2015, I was looking and saying, equities in general, the public equities market, it's pretty mature. The platforms are pretty mature, and so what's the next kind of state of friction? And formed Rialto Markets. We are a FINRA registered broker dealer. We operate an SEC recognized alternative trading system. We were looking at what's out there that sort of has a lot of friction, and we found private markets. It was really funny because when we first came upon private markets, it was very similar to the 90s in public equities. There was not a lot of infrastructure there, not a lot of systems connecting things. And so that's sort of how we started Rialto Markets, and that's sort of how we got here today.
Wow. So starting with electronic trading and working at Goldman, being able to look at their systems, later with Deutsche Bank, seeing the whole evolution of the markets at this point, and through your career at global equity trading and everything going on there, once you finally looked to form Rialto Markets with all of this experience, all of this success, you said, hey, I've seen this before. We can build this out. Here's some of the obstacles that are going to occur based on my experience in finance.
That's exactly right. And what's so fascinating is we really came at it looking at, we've seen this before, to your point, but there's better technology than in the 90s. So, we worked with the SEC and FINRA for about 2 years to be able to expand our mandate to actually be able to implement both traditional private market securities as well as blockchain-based or digital securities. And we really think we're in such early days when it comes to digital securities, but we really do think that that's going to play a massive role in the market going forward.
Sure. Now, did you know you wanted to go the portal route right out of the gate, FINRA regulated? I know you're looked at as a broker dealer as well too. What was the distinction there, and what is the advantage to being a FINRA regulated portal?
Yeah, so in terms of the way that we work with issuers, so we're slightly different than the marketplaces that a lot of people know, such like for primary issuance. So we have really two different lines of business. Primary issuance, where companies are raising money from the public. We operate really where we sort of stand behind the issuer's website and provide all of the infrastructure on the back end, and then provide those know your customer checks, all of the the payment rails, all of that type of infrastructure play. Whereas there are other sites we work with quite often that offer a marketplace type of experience. And it really depends what kind of company you are, what you're trying to do. If you have a large community behind you and you're trying to manage the experience, versus if you're raising a smaller amount and you've got a smaller following, you might want to go the portal route. In terms of the secondary market, it does look more like a portal because there are many issuers that are on the site. So there's two different experiences. And the reason that we've got two different experiences is because when you're trying to raise capital, you really want, a lot of the issuers, they're trying to raise the money. They're interested in, getting the money in the door, really building out the capital. When you're going onto the secondary trading alternative trading system, you're giving your investors the opportunity to monetize their investment. So at that point, it's not so much you're trying to raise funds for the company, but you're offering your employees, you're offering your investors a monetization capability that really doesn't exist today. So that's why we felt that the portal route and grouping all of the different available investments was more beneficial, because we're bringing a network effect. We're bringing many investors to the table from that perspective.
Makes perfect sense, and definitely see those long-term potential elements to it, especially of secondary markets and everything that will be possible there over time with more awareness, of course. And when I think broker-dealer, I think of an existing list of investors matching issuers to those types of deals. I know you guys do so much more than that, and I know portals, it's an uphill battle to build an audience, and over time, what was that like establishing that for Rialto? What was the initial investor response? What were some breakthrough moments that have then led to a more effective offering for issuers that work with you today?
Absolutely. So we certainly found, and actually we have very transparent conversations with issuers when we begin working with them, because the way that we work, again, it's on the issuer site. And so it's really incumbent upon the issuer to have a very strong digital marketing campaign. And that's something that I think a lot of issuers come and they're not as aware of what that means and what sort of the undertaking is. But that really is the critical factor in terms of the success we've seen versus other campaigns that haven't been as successful. So you definitely need to commit to an investor acquisition strategy. Now, that comes in a couple different varieties. You've got your digital marketing, which clearly you're very familiar with. You've got your digital marketing campaigns. Those are absolutely critical, because that just builds the brand. It's a very virtuous cycle, right? You're building the brand while you're bringing investors into the company. But then you also have, especially for those issuers that are doing a raise of $50, $75 million, it's going to be very challenging to get retail investors to fill out that entire round. So we connect to a network of investment banks to help bring in institutional investors to help fill out that round. So a lot of times we'll walk issuers through a strategy of a diversity in terms of the investor bases that they need to bring to bear. And it's going to be a combination of their existing community the digital marketing outreach, and then those institutional investors.
And so you have these relationships with the investment banks that are able to bring in institutional investors, you know, how to present this, work with the issuers, and making sure their deal is primed to be well received, and then begin rolling out that process. How long does that take? How do you prepare issuers for that process? I imagine, some initiatives, some campaigns could be quicker and more successful in different windows of time. How do founders, issuers wrap their head around what's to come in that dynamic?
Exactly. The more time, the better. You're never going to have time.
Sure.
Is sort of what I say. But I would say 4 to 6 months minimum in terms of the preparation. Making sure you've got all of the foundational elements ready, and that you're lining up all of your speakers and you're engaging and getting the story really concrete. Then, and that's, the first month and a half. That's really what, you're doing there. Then you'll engage with a few investment banks. And those investment banks can either be technology driven, meaning they can have a platform that goes out to tens of thousands of investors that are accredited investors, family offices, hedge funds, venture capital firms, and others. Or it can be more traditional, what you think of when you think of investment banks. You do a typical roadshow, virtual these days, but a typical roadshow, and you've got the deck. So the first month and a half is really, in general, is very foundational. Then you'll begin working with the investment bank and really developing, the list that you're going out to, who you want to be reaching out to. In general, you'll in general be working with one investment bank and craft that strategy, and then it'll be 6 weeks, 2 months of concerted outreach. And then, sort of to the title of the podcast, Test, Optimize, and Scale. It's really, you'll have a full frontal attack of, okay, go to all of these potentials. You'll have your first meetings, do all of your follow-up. Then you'll usually evaluate, where are you at? Do you have any term sheets? Do you have any offers? And then evaluate, do you need to be, sort of veering left, veering right, looking at other forms of financing.
That is a very thorough breakdown. I had an idea about the process, but looking at the specifics with those time ranges fills in some of the blanks for me. I imagine listeners here as well. And I like how you are able to align with the clients, see where they're at, figure out where things go. Like you said, to the name of the show, because to me, there's a realism element to that. We'll hear some service providers paint this picture of, and then we raise you $20 million. And
it's so never that easy.
Right? And it's all about what to do when things are not working, or just when they are, but you're looking to make sure you're continuing to stay on path. So I like that regroup that occurs. And, in that process, you're given some ideas on what to test out here, but just to jump ahead to optimize a little bit, what different obstacles do issuers find themselves, month 2, as you had mentioned, month 1 setup, building the foundation, you're getting introduced to the banks, you find one, they're list building, you're then doing the reach out. If that outreach is not landing, what happens at that point? How do some optimizations take place? And have you seen issuers who maybe weren't seeing the traction they set out for initially and were able to turn things around?
Absolutely. So, I'll think about some actual examples of, in general, the categories of feedback that you get, and I do think it's important for issuers that are listening, and having been a founder. So I came from a corporate environment, and so when I started the company, I thought, I had sort of, because I'd been a COO, I'd done many different functions, but the one thing I'd never done is raise money, and so it was quite an eye-opening experience for me. And one thing that I've learned is, in general, institutional investors in general will take the call, because just like traders, they are information gatherers. And so they are gathering information. And it's not to take it personally or take affront to it, but just to realize that, you need to make sure you're optimizing your time, because this is all about, outlasting the cash flow, living to fight another day, right? Getting to the next milestone, getting to the next either capital infusion or getting to profitability, but getting to that next milestone. And so if you're spending a lot of time on a certain group of investors, and, what I've seen in the past is, issuers can tend to spend a lot of time with strategic investors or with institutional investors, and it's great to develop those relationships, but just kind of have a pie and say, is this a long sales cycle or is this a short sales cycle? And make sure that if it's a long sales cycle, you're not allocating more than 15 or 20% of your entire pie to it, because you're going to run out of time. You're going to run out of time, and you're going to have spent all of your time with these great names, but they're not going to bring the check that you need. So that's really important. In terms of getting back to your actual question, in terms of issuers that we've seen that have, gone out, had some great calls, but haven't been able to sort of land the deal or close on the investment that they want from those institutional investors. It's either been because, it's too early, come back in your next round. That's very often, what we hear. Again, don't spend too much of your time with the institutional investors who are not investing in your stage. That's one. Two, look at taking on different forms of financing. So there are really interesting forms of financing, especially for different types of businesses that are, already starting to sign contracts, that are, that can help finance in different ways. So whether that be, different types of, I hate to say debt financing, because for early stage companies, that's not really feasible. But in terms of, if you've got contracts you're a technology company and you've got contracts that you've already got signed, there are new models coming out that will finance your company based on that model. And I think, some of these more innovative funding models are going to be really interesting, and that's really what you need to look at. And that's what we've seen is companies like quickly pivoting and finding these new opportunities for funding.
Very interesting. And the way you talked about time, I've definitely seen it, and in offline raises and in earlier parts of my career, part of what drove me to equity crowdfunding to begin with, and seeing inefficiencies, the misallocation of time towards investors who simply were not going to participate, maybe down the line, or even, just having a broad enough approach, having enough investors. So if you get a small closing rate, it's still enough to move the needle. I think that's such great advice and so relevant to many of the founders that we speak with on a daily basis. And then talking about different forms of finance, very interesting. I'm actually curious about more of those, and always want to be making the right recommendations of who to speak to for founders. It's a bit outside of our lane for marketing, but being able to bring up those ideas, I think, is a very constructive exercise for founders at this stage. We've seen follow-ups and longer timelines help out here, but always look to change up audience, creative, funnel, the process we're taking them down. A lot of that, marketing speak, but I'm seeing the similarities here, and kind of not putting all of your eggs in one basket, being able to test out and seeing where the performance is coming from.
Well, and I just like to underscore, what you say at a certain point, you're going to deplete the audience. If you, sort of go after an audience and see some success, especially in a digital marketing campaign, there will come a time when that audience is sort of exhausted, the return. And so working with a really good digital marketing agency and finding the diversity of being able to expand your horizons and expand that audience base so that you can continue that funnel, right? Continue to build out that funnel is just critical, especially when you're going into the crowdfunding space. I think one of the misconceptions sometimes is that, just, build it and they will come. And that's just not the case. There's a lot of really hard work that goes into a successful campaign, and it might look effortless from some of the issuers that you see. It's sort of, oh, they just snapped their fingers and they had an oversubscribed raise, but it was based on years of hard work of, building up a community, having good communication to that community, and kind of rinsing and repeating.
It's very good to hear you say that, because it's something, even with the build that they will come language, that we use regularly. And there are a lot of misconceptions that occur. You work with legal, you work with different types of financial professionals to get everything set up into this point. I'll get on the line with founders at times who are unaware that they need to spend on marketing, and surprised at some entry-level pushes that are required. They thought simply by listing on a portal or getting everything set up on their site, they would be good. I also hear, hey, we're just going to work with a broker-dealer. They're going to close it all out for us. To hear the steps in the background really paints the picture. And again, the similarities between any approach.
And I just want to be very, very clear. We're very clear on our sale when we get on the phone with clients. We're not an investment bank. We partner with investment banks, and we do not bring clients to the table. So we assist with all of the operational functions, but the issuer is going to have to bring the investors. And that's really going to be a function of their existing community and digital marketing push and working with investment banks. But it's, a lot of people, to your point, they hear broker dealer and they think, oh, E.F. Hutton. I know that's a very old, they think, this old, they have this construct, this mental model in their head of, oh, there are going to be all these people calling on my behalf. That's not the job that we're performing. We're really performing an operational role of assisting in the know your customer suitability, anti-money laundering reviews, and handling some of those states that require a broker dealer for Regulation A raises. So it's definitely an education. And I think, because this is all very new, all of us in the ecosystem, which is really kind of fun, all of us in the ecosystem have been out there kind of educating and banging the drum. So people are getting more educated about, what this is and all of the different actors, but it's overwhelming. It's a lot of different pieces, and it can be overwhelming.
Sure. A lot of different pieces. Really takes a team, in my experience, being able to have Rialto on the team to be able to bridge those conversations on top of the foundation. It's going to be a massive difference than if, a founder is going about it alone. Being able to have a marketing agency involved, a legal group, all of these professionals who are working on these campaigns day in, day out. As you said, education, you have the insights from a high volume of very successful campaigns. We've worked on campaigns where goals weren't hit. We had to be creative about what to do. We were able to manage them to a point of effectiveness in many cases. I've also seen campaigns fail, but I take the learnings from that and am able to, what I hope is save founders from going through those same mistakes, those same steps, even just the time and having to invest in going down that road. So I think taking away any myths around the process is such an important part of it.
Two other things I'd just like to mention on the back of that, is one thing we often talk to founders about and issuers about is, how much do you really need to raise? Because especially since the caps have been raised, I think there's a not misnomer, but a branding issue around regulation crowdfunding versus regulation A. And a lot of people will say, well, I really want to do a regulation A raise and I'm raising, $5 million. And we'll say, well, if you're raising $5 million, you should do a regulation CF. And it's quicker to market, it's less expensive. You can check out, unless you've done these raises before, it's less expensive and you can get there quicker. And you can always do a regulation A after that. So a lot of times we will actually lead people down that path on a self-hosted, not self-hosted, but on a standalone site for Regulation CF should they have their own community. The second thing is in just bringing back to some of the campaigns that we've seen where there have been, not immediate success. Some of the things that we have seen is, tapping different markets, to your point, whether that's different communities or different international markets, and really looking to be able to tap those as part of the raise and part of the campaign.
Looking to change things up, see where the performance is, testing different audiences, and again, showing it's a constant work in progress, even when the campaign works right out of the gate, but to get to those next milestones.
That's right.
Absolutely. And we're always looking to make recommendations that'll lead to a higher success rate industry-wide. I want to ask you about the industry. Where do you see everything going over the next few years? How can groups work together to see a stronger, I'll say it again, success rate industry-wide and prepare for different changes that will occur in the market years down the line?
Yeah, I think, we're at such early stages in the evolution. Again, I'll say it again, it reminds me a lot of the early days of equities. And I do think that, we're going to see a proliferation of a lot of different players come into the market. There'll be consolidation, and, there'll be evolution. There'll be different players who, do something specific in the market or have a different niche, different niches in the market. I do think that it's getting far enough along that issuers are coming to us much more educated than they were in the past. A year ago, issuers would come to us, and it really was quite an educational undertaking to sort of walk them through everything. Now it's really interesting because we're talking to issuers who have already done a lot of homework and they understand most of the steps. We obviously have packets that we give out that go through timelines and requirements, but in general, what I found is that issuers are much more educated about the process and the requirements. I do think that the different players in the ecosystem are starting to come together. We've had we've had at least one good industry conference. Hopefully we'll have more industry conferences that can help bring everyone together. And it reminds me, certainly that conference reminded me of, very early days when the players are in it for the right reason. They really see changing capital formation, which is why I get excited about it. The ability to really change the way the companies raise capital and change their trajectory, how they build their company. And again, that virtuous cycle of making, the consumers of their product, the community that they build, investors in their company. And that fundamentally shifts the dynamic of the relationship. So to me, and a lot of people that are in this ecosystem, I believe, feel the same way. So, and it's still relatively small that I think everyone knows everyone, which is kind of nice. So, it's just beginning. We've seen some pretty explosive growth, and I think we're going to continue to see more explosive growth over 2022.
Yeah, my team and I have had a fun time watching the numbers.
Yeah.
Obviously, since March 2020, this year, March, April, as the Reg CF extension occurred, and even in Q4 here, it's exciting to see where things could end up in 2022. Imagining different players that can enter the space down the line, higher volume of issuers, higher volume of investors. I see the opportunity for secondary markets. Also, groups that are always fundraising and having marketing funnels that take a customer into different investment opportunities or vice versa, and long-term growth plans that are associated with multiple rounds on this vertical.
Absolutely. I mean, where I find the exciting opportunities are the sort of serial issuers where you have the opportunity to really invest in things that hadn't been investable before. But also, what's been interesting is we received a lot of calls after March because prior to March, a lot of the investment banks, whether they were boutique investment banks or others, weren't really interested in this space. But once the caps were raised, I mean, $75 million a year is that's getting to be into real money. And so a lot of more traditional financial services firms started reaching out to us, including those financial services firms with registered investment advisor networks that were having issues, breaking into two things. One, not breaking into private markets, but figuring out how to offer private markets in an actively managed way in a cost-effective manner. That's one area that's been really interesting, and we've been having lots of active conversations around. The second, really interesting area is traditional financial services firms who are saying a lot of these companies that are raising are in new sectors, green tech, space tech, cannabis. These are sectors that, the younger generation is interested in, and I need to figure out how to be there. So really, over the last 6 months, more larger financial services firms are sort of sitting up, they're taking notice. And I think as they dip their toe in, you're going to see a fundamental shift in terms of the interest in this market.
Yes, and the verticals you mentioned, verticals that don't exist yet, all of this is happening. I've been watching it since 2016 with Reg CF and amazed by what's occurred this year. And with the surge of retail investors, I still know groups who steer away from retail and only pointed at the accredited. I should actually ask another question about accredited investors, but I've seen both of them be so valuable and in small windows of times, and from a capital raising standpoint, and then for ongoing growth towards the brand and how it's reflected on the valuation, how it's forming super customer / ambassadors from retail investors that are coming on board. But wanted to ask real quick around that, for some of your successful campaigns, what percentage are you seeing accredited versus retail? Doesn't have to be an exact number, but what does the balance look like from, the institutional investors and then other retail investors who have participated?
Yeah, it's a real barbell. So, I would say the numbers are 85% are retail investors, and then you get a few institutions that come in, and again, that's deal dependent, and then you'll get a handful of accredited investors, and it's probably going to be more than a handful, but the check sizes are quite significant. So there's kind of this gulf in terms of the investment amount.
Sure. Again, I think that gives a good, clear visualization, because I've seen a lot of different narratives towards that, and for some of the larger Reg A Plus campaigns as a whole, where I do look at it as that combination. What about scale? I know we've talked about some different things to test out with the foundation, being able to work with a group like yourself and go after discussions with investment banks, going towards institutional investors. using digital and going after retail there as well too. All great recommendations for what to test. When it's not working, look at the time that you're committing towards some of these investor discussions. Look at other forms of financing. Look at how to change up the funnel, the pitch, as you're mentioning. What are some commonalities you've seen in successful campaigns that have scaled? What are some recommendations that we can provide for founders to scale?
Absolutely. So they've built communities. They've built communities and they engage their communities off cycle. So they really have a constant dialogue with their community, and but it also provides them with a pretty incredible access to capital. So they sort of started off with a Reg CF raised from a certain community, certain subgroup. Then they've built upon that, but during that entire time, they're providing those super users and investors with updates onto their milestones and a real look inside the company. And I think people love that. They crave that, right? And people are, investing with their heart and their mind, but they're really investing in things that they want to change the world. And so companies that we've seen have really successful scaled raises have started from the beginning or near the beginning, creating that community, fostering that and cultivating that community, but giving an inside look and really creating a sense of an insider. You're an insider to the community. You're sort of seeing behind the curtain, which people love. People love to see kind of what's going on the factory floor or what's going on behind the scenes. So that's really what we've seen, and I think it's a successful strategy.
I think that is definitely consistent with the investor discussions that we've had, particularly with the retail investors, in stating that they wanted the experience, they wanted to be part of the organization in this high growth vertical. That insider positioning is exactly what they stated. And to look at how that impacts a community, how the community can invest in future rounds or continue to provide value to that organization speaks very strongly. So I think you pointed so many key points there. As we wrap up the discussion, just wanted to ask, any final thoughts, any final recommendations, anything we didn't get to speak to today that you wanted to emphasize to listeners?
The only thing I'd like to close on is it really resonates with me, the impact that this can have on the future of just companies, in terms of from their formation all the way to companies growing quite large. Companies today, as we all know, companies are staying private longer. But there's also this shift in companies wanting to engage their community, people wanting to become involved. And so it's this real dynamic shift. And I feel like that we don't even understand the impact that it's going to have on the broader landscape. But what I love that, first of all, the SEC has provided a framework where everyone can come in and participate reasonably, not giving away their fortune, but participate reasonably in these private companies and participate in the future growth of the new industries, as well as help form new industries and help form the new economy. And that's what I get really excited about. That's what I find really interesting and what's different about the companies that we're working with today. It's kind of funny because when I was early in the 90s in electronic trading, and then sort of everything turned to index investing, and it was sort of just put your money in an index, right? Like what's the difference? The S&P 500 or whatever. I feel like everything's kind of shifting, and now it's everyone's investing with their feet. And it's a really great way to kind of have an impact.
Impact is the word, investing with the feet. I like the analogy. Shari, thanks so much for joining us. These notes I'm going to be going over with my team. I know listeners are going to be sending comments and getting feedback from this as well too. I appreciate you joining so much. If anyone is watching and wants to get in contact with you, wants to get in contact with Rialto, what is the best way to do so?
Please go to the website, rialtomarkets.com, and just contact us from there.
All right. Excellent. Well, thank you again. Appreciate the time. This has been a great discussion. Listeners, we'll see everyone next time. And thanks for tuning in.
Thanks so much for the time. Bye, Jason.
Shari.